Ladies and gentlemen, good afternoon, and thank you for joining us for the post-result conference call of UCO Bank. It is my pleasure to introduce to you senior management of UCO Bank. With us, we have Mr. Ashwini Kumar, MD and CEO, sir, Mr. Rajendra Kumar Sabu, Executive Director, and Mr. Vijay Kumar Nivrutti Kamble, Executive Director. We'll start the con call by opening remarks from the MD, sir. So over to you.
Thank you. Very good afternoon and welcome to all the analysts for this analyst call based on bank's financial results for 2023-24. Well, total business of the bank grew by 9.5% to 4,50,000 crore, and deposits grew by 5.53%. Advances grew by 15.62%. Within the advances, retail advances grew by around 14.62%, and within the retail, home loan grew by 21%, vehicle loan grew by 31%. Agriculture advances grew by 13%, MSME grew by 13.53%. Bank's business per employee also increased from 18.90 crore to 20.93 crore, so around 2 crore increase in the business per employee. And operating profit is concerned, operating profit for the full 12 months stood at 4,576 crore, registering a growth of 5.43% on a YOY basis. Last year, there was a decline of 10% in operating profit. Net profit for the full year ended 31st March 2024 stood at 1,654 crore as against 1,862 crore during the same period in the previous financial year. Net interest income for 12 months increased by 10.3% on a YOY basis, similarly on Q1Q basis and a financial year basis also. Asset quality of the bank improved, gross NPA improved from 4.78% as on 31st March 2023 to 3.46%, thereby a decline of 132 basis. Net NPA also improved to 0.89% from 1.29%, so decline of 0.40% in that. PCR of the bank improved to 95%, and our tangible PCR is at 75%. Capital adequacy of the bank is 16.98%, wherein the Tier 1 capital stood at 14.54% and CET1 stood at 14.14%. Bank's restructured portfolio has declined from 4,111 crore to 3,500 crore, and restructured book provision bank is keeping around 308 crore in the restructured book. In addition to that, the COVID restructuring provision which we kept earlier, 530 crore, is still kept intact. As far as slippage is concerned, slippage for the quarter ended was 474 crore, which was in line with the previous quarters. And if we look at overall annual slippage ratio of the bank, that we had given a guidance of 1.25%, it is at 1.27%, whereas in the previous year it was 1.75%. And if you look at the slippage during the quarter, that was from retail was around 90 crore, from agri it was 104 crore, and for MSME 179 crore, and corporate it was 101 crore. This was about, if you look at our expenditure, operating expenditure, the operating expenditure of the bank grew in this quarter mainly because of pension and gratuity provisions in view of this wage increase settlement which was entered and approved by IB and the Government of India. Because of that, the wage AS15 provision has increased substantially. For wage revision, we had already kept a provision of 507 crore till December, which we used for the payment, and we are carrying only around 70 crore of further provisions for in this quarter. Cost of deposit ratio of the bank improved in this quarter over previous quarter from 4.91% to 4.82%. On a year-on-year basis, it was 4.78% from as against 4.06%. Bank's cost to income ratio increased to 62%, and overall was 60% for the year, basically on account of increase in the employee expense, largely on account of wage increase and AS15 provision. Yield on advances also improved to 9.06% in this quarter. Overall yield on advances improved to 8.83% on a financial year basis. Net interest margin, we have kept a guidance of 2.90%. For domestic, the net interest margin for the quarter was 3.25%, and on a global basis, it was 3.03%. And on a yearly basis, net interest margin for domestic was 3.12%, and on a global basis, it was 2.92%. And if we look at our CRAR, it is around 16.98% now, which improved from 16.41% in the previous year. And bank has taken approval for raising capital during the year from the board, and which we will go to the AGM for further approvals. That is around 400 crore issue 400 crore equity shares for the face value of ₹10. And bank has also declared dividend for the first time after 9 years, 2.8% dividend because of the consistent profit for the last 3 years bank has been making. As far as provisions, we are holding provisions, forward-looking provisions around 1,100 crore in addition to the mandated provision of 1,400 crore. So overall, on a standard book, we are keeping 2,500 crore of provisions. This is all about financial performance of the bank. And just to give you idea about the initiatives the bank has taken over the period with regard to CASA acquisition, because we started with the resources vertical, and now we are strengthening this resources vertical by making resources team at the field level. We are now going for a digital transformation process for which the vendor has been selected and financial approvals are being taken, and so that the digital transformation journey will start. In the previous year, we completed our HR transformation, wherein all HR related matters have been digitized, and performance management solution has also been put in place. Now, bank is also working for bringing new integrated treasury solution for which contract has been awarded, and maybe in this quarter the work will also start. And the bank has also implemented a state-of-art call center, revamped the entire call center, and state-of-art call center has been implemented. Bank also introduced tab banking previously in the previous financial year, and as on date, around 1,600 branches have been provided with the tab, and they have started opening accounts with the tab banking, and which gives us a edge now to reach out to the people, to the customers, to open their accounts at their workplace or home place or at their factories, wherever they are. And bank now is also going to implement opening of current account through the tab banking in the times to come. Bank has also started various IT initiatives other than these, wherein we are going to implement VM. We are going to upgrade our overseas Pinnacle network. We are going to bring new technologies for the cyber security, and many other initiatives have also been planned in the times to come. For the skill capacity building, bank has already started the learning and development project, wherein we are revamping the entire learning and development concept in the bank, and the center of excellence at the training center level for a particular field are being implemented now. And this year we will be totally revamping the entire learning and development project which bank has started. This is about the bank's performance and the initiatives bank has started now. So now I am open for the question answer. With me, our team, Mr. Sabu, our ED, Mr. Kamble, another ED, and our corporate GMs are also there to answer your observations and the queries. Thank you very much.
Thank you, MD sir, for your opening remarks. Anyone wishes to ask a question, please raise your hand. We'll wait for a couple of minutes for the question queue to assemble. We have our first question from the line of Mr. Sohail. Sohail, you've been unmuted. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. So 3-4 questions from my side. First, related to employee revision. So this entire 17% increase in the wage hike has been provided for, and that is the result of the 720 crores employee expenses coming this quarter. Anything residual left? So the second is with respect to the investment book reclassification, so which was supposed to happen on April 1st. So if you could highlight in terms of what could be the impact on the balance sheet, CET1, as well as how are you looking at the treasury income going forward because of these change. Third, in terms of ROA, we are generating an ROA of closer to 0.7%. Just wanted to understand whether any more levers in terms of margins, OPEX or credit cost is left, and what would be your guidance towards that 1% kind of an ROA? Then probably I'll come back for follow-ups.
Thank you, Sohail. And first, let me clarify that employee cost increase has been totally taken, including the retirement benefits, the AS15 provision on gratuity and pension. Everything has been taken care. So that is the reason that this quarter there was a substantial increase in the AS15 provision from this quarter. And with regard to the investment book, I will request our ED to just give a brief about the investment book reclassification which you have done.
Yes, sir. So the investment book reclassification as per the latest RBI guidelines takes place on 1st April 2024. So that we have already taken up, and as per the guidelines of RBI, we have reclassified our books in HTM, AFS, and that the third category that has been brought FATPL, profit and loss, and within that HFT also. So all three categories we have done it. So the impact on balance sheet will not be much because our investment books are mostly in HTM and AFS. HFT is very small part, and out of that the SPPI formula has been applied, and most of the book which is interest generating book, means basically the bonds and securities, where the interest payment is happening on quarterly or half yearly basis. So that is already classified in AFS and HTM. Very small part is there in the FATPL or HFT book. Other investments have also been classified, so balance sheet impact will not be much on this reclassification. Only one impact will be that our recap bonds, which are zero coupon bond, basically issued in the next tranche. The treatment of that recapitalization bond will slightly change because as of now we were taking the investment value in the asset side and we were reducing the zero coupon impact to our capital. So now that the net amount only will be taken up as per the carrying value. So that will be slightly changed, but it will not have any impact on our CET1 ratio because that is calculated already as per the net amount which is available after the zero coupon discount is we have removed out of that 2,600 crore. On new carrying value, the plus minus whatever is there on 1st April 2024, that has been taken up into the AFS reserve or general reserve, particularly in the starting. That was as per the guidelines of RBI. So net impact of that also will not be much. It is very slight impact on the CET1 ratio, whether it is positive on the CET1 ratio because slightly it will be increasing. So I don't think any a very significant impact there. Hardly it will be around 4-5 basis points on the CET1 ratio. So that is there. Now the third point which was raised was about the profitability going forward. So again, the profitability going forward as per the new directions, whatever the securities are there in AFS reserve, the plus minus M2M of those securities will be taken into the AFS reserve. So that will not impact the profitability. So whatever the volatility we have been looking into the profit and loss account on every quarter due to the mark to market changes in the valuation of the securities on quarterly basis in AFS book, that will not be there. So AFS book, whatever M2M will be there, that will be taken into AFS reserve directly. And whatever the residual amount is there in the HFT book, that will only impact our P&L account. So that is very small amount. And going forward, we are trying to keep our AFS book within this limit, and HTM, because there is no limit in HTM now, so we can keep our securities up to unlimited level in HTM. So we will be selectively putting our securities where there we have a view to hold the securities till maturity in the HTM also. And AFS we will be very selectively means keeping the securities. Already there are certain securities. We have certain securities also shifted into AFS also. That we have already done that exercise. So I think the profitability going forward will be direct into the profit which we will be booking earlier through AFS sale. That will also not be available. So that will also go to the AFS reserve only. When we exit totally from any security, then only it will go through the P&L accounts. So more or less the P&L will be, I think, insulated from the up downs of the market for M2M means on the AFS book. I think that will be positive for the bank. That's my view.
Sir, just in this, sorry sir, just a follow up on this treasury only. So in this case, probably if suppose the interest rate cycle is on the downward, so earlier we had an opportunity to book treasury gains. Will those also be limited? Because once you have shifted the book into HTM, you may not be able to classify it again into AFS, and probably those are something that you would lose out on in terms of PN.
Yeah, to that extent, because HTM, whatever we have on 1st April decided on HTM and AFS, that are now frozen. So we cannot now shift the security from HTM to AFS or vice versa. So at the time of adding new security only, we have to decide whether we have to keep it into HTM or AFS. That is one part. Then whatever book we have in AFS, that is there available for the profitability. If we are selling from AFS, it will go to AFS reserve first, and if the security has been fully exited, we have exited from that security fully, or that security has been matured. So then that part of profit pertaining to that security will be taken into the profit and loss account. So if we are selling from the, as you have asked, if there is a means moderation in the interest rates in the market, and we see gain in the security portfolio in AFS, we will be selling, and if we are booking the profit, that profit will of course go through the AFS reserve into P&L. So I don't see much impact of that issue, because HTM already we have our HTM portfolio decided, and that is basically the core portfolio which we are not going to sell anyway. So that is not going to impact. Only from AFS we will be selling whenever there is an opportunity in the market, as we are means looking for rate cuts or moderation in the interest rates going forward. So I think that will be available.
Understood, sir. Sir, on ROAs and the levers for the same?
See, ROA, if you look at ROA, it's around 5.56% for the full year ROA. And bank is working towards operational efficiency, because last year, when we closed last year, 2022-23, there was a decline of operating profit by 10%. Now this year, even after absorbing the increase of employee expense, maybe 1,000 odd crore, bank has registered an operating profit of more than 5%. So bank's focus will be continue to be on ROA, on operational efficiency, and through that we will be working for improvement in our CASA also, because the resource center are being established. So CASA will give us a low cost deposit, and we, as you have seen, we have improved our yield on advances this quarter and the NIM also in this quarter. And we will continue to monitor our pricing very closely so that we protect our NIM, whatever guidance we are giving. And another lever which I think for ROA is your credit cost. Credit cost, you can very well see that our credit cost during this year is less than 0.75, and maybe going forward our credit cost may come down also. And because our gross net NPA is hardly 0.89%, and we are holding around 1100 crore of additional provisions, also forward-looking provisions in our book, in addition to 1400 crore of our mandated provision by RBI. So in all, 2500 crore of provisions are there on the standard book as well. So I believe we will continue to work on operational efficiency, and which will resultantly increase our ROA going forward.
So closer to because of these some of these one-offs and probably credit cost still being slightly higher, and you also having a reasonable amount of room and loan to deposit ratio, can we expect that probably in FY25 you can reach closer to 1%?
Maybe it will be a challenging. It may not be easy going. It may be challenging, but yes, definitely the effort will be to improve on ROA on a quarter-on-quarter basis.
Sure. So, and final question from my side. I know that probably the guidelines or the final thing is not out, but anything that impact of the ECL if implemented, and probably any update on that? You hear anything from RBI?
No, till now no update. Nothing has come. But the bank, as I told you, we have already started making some forward-looking provisions to take care of the guidelines when they come. Because restructured book is one portfolio where the guidelines will be impacting much more than anything else. There our outstanding is 3500 crore. We are holding 300 odd crore provision on the restructuring book, plus COVID forward-looking provision of 530 crore also on the restructured book. So that book is already protected to a great extent. In addition to that, on SMA 1 and 2, which was in June, we kept a provision of 189 crore. That time that book was around 2000 crore or 2200 crore. Now that book has also come down, SMA 1 and 2 book, but we are currently still holding the 189 crore, which we kept in June 2023. So that way we are trying to build as a matter of prudence, making the bank ready for anything which comes out of the ECL guidelines when the RBI comes up.
And so in this ECL framework, last 5 years data is used, right?
Yes.
So the later it get implemented, post-COVID asset quality has been very strong. So these numbers could be dynamic and change materially if it is implemented 1 or 2 years later.
Yes, you are right. It will have a positive impact on it.
Sure. So thanks a lot and all the best.
Thank you.
Thank you, sir. So we have a next question from Maruk Adajania. Maruk, you've been unmuted. Please go ahead.
Can you hear me,
Maruk?
sir? Yes. Can you hear me?
Please. Yeah, please. Yes, please. Go ahead.
Yes, sir. Hi. Good afternoon, sir.
Good
So I
afternoon.
have two questions. So, what would be the proportion of bad loan recovery income that would be part of your net interest income? Would you have any rough estimate, or would it be there at all?
And for current year or next year?
No, current year, as in that in the fourth quarter and full FY.
Quarter, how much is it? 100, it's 110 crore.
Okay, so 110 crore of NPL recovery income.
Interest income. Interest income on NPA, booked interest income.
Got it. So
which is part of
basically,
NI.
how do you decide how much of NPA recovery to take through NII? Basically, anything above your book liability, is it? How is it decided?
Yes, yes,
Because that's
exactly.
a bit unclear. That's right. Across
Here
banks, not only for your bank.
see here, whatever amount, suppose I am giving a small example. Let us say 10 crore is outstanding. And if we are receiving 11 crore, 10 crore will go towards the principal and 1 crore will go towards the interest.
Okay, 1 crore will go to interest. Got it. Got it.
Yes.
Got it. Makes perfect sense. So, and the other question I have is that basically, do you see recoveries remaining this strong and you being able to, book 100 crore income every quarter on recoveries next year also?
See, recovery, I must say that that the low-hanging fruits with through NCLT and other actions have already been recovered. There are still many accounts which are under resolution, and we expect through NARCL also and through NCLT also there are certain accounts that are under liquidation. But definitely the amount of NI interest which will be forming part of our interest maybe may come down a little bit.
But in general, every quarter, currently the proportion would be around 110 crore. It was higher in the fourth quarter.
No. It was generally it is in the range of 40 to 50 crore. But this quarter in one account we got extra amount also. So that is the reason this quarter the amount is high. It is around 40 to 50 crore.
Got it, sir. So, and the other question I have, the first the earlier participant already asked that basically when we move to the new investment guidelines, then what do you think would be a normalized proportion of HTM? I know it's capped currently, now the limits go away, but what do you think eventually you will like to hold as a percentage of your total investments in HTM? Any rough cut guidance?
Sabuji?
Yes, sir. So, madam, actually, earlier there was a provision that we could sell from HTM even more than 5% also we could sell with just our disclosures in the annual report. But now in the new guidance, we can't sell more than 5%. If we sell more than 5%, we need prior approval of RBI. So with that provision in place, and second provision is that we cannot shift from HTM to AFS now. Earlier, we were able to shift every year. So now that provision is also, now the HTM is actually HTM. That is, once it is in HTM, it is HTM always, right? So, so that way we are very conscious to keep the securities in HTM. Where actually we want to hold it till maturity, we will keep it only in HTM. And the HTM proportionate as of now, I think on the 1st April, what we have on the 31st March, we have reduced little bit because we have shifted certain security on 1st April because this was the one time chance given by the RBI that we can have our portfolio means recalibrated according to the guidelines. So we have certain securities shifted from HTM to AFS. Now going forward, the HTM book will be maintained at around that level only. That will be, I can say, as of now, our whatever investments we have around 90,000 crore. And if we see the SLR investment only, that is around 66,000 crore. So out of 66,000 crore, I think around 75-80% is in HTM. So I think going forward also that same ratio will be maintained because we have to have 18% security, of course, in any way to have SLR investment of our term liability and demand liabilities. So that is the 18% SLR maintenance will be required so that we can keep into the HTM because that is already means the factored in thing. We have to keep that. Over and above that, we can keep in the AFS so as to have an opportunity to book profit as and when it arises in the market.
Got it. So the proportion is unlikely to change much.
No, it will not change much. Only thing is in a non-SLR, it can certainly means limited way because non-SLR, as of now, we were not keeping into the HTM. It was only part of HFT or sometimes in AFS mostly. But now because non-SLR, if we take into HTM, we can keep that in HTM also. So non-SLR portion may increase little bit.
Okay, non-SLR and HTM. But even with all that, the HTM proportion remains more or less stable. A
Yes.
bit here and there. Okay, got it,
Right.
got it. Okay, sir, this is very helpful. Thank you so much.
Thank you.
Thank you, ma'am. We have our next question from the line of Shweta. Ma'am, please go ahead. You've been unmuted.
Hello, am I audible?
Yes, please.
Yeah, good afternoon, sir.
Good
I
afternoon.
have a couple of questions. We observe an almost 50 basis point of lowering of exposure towards NBFC. So, how much has the bank increased the interest rate for NBFC after the RBI guidelines for risk weightage increasing?
See, there is no standard way that in one NBFC we have increased by 100 bips or 25 bips. It is based on the mutual discussions, and if the pricing which we quoted, if it is not acceptable to them, and which they quote that is not acceptable to us, if we are not making any money out of that, we have decided to call back. So there were certain exposures. We increased the rate which they did not agree, so they paid us, and we happily accepted that because we had the opportunity to re-lend in other productive sectors as well. So there is it can't be quantified that 25 bips across or 50 bips across. It was increased on a case to case basis. Somewhere though we intended, but they did not agree. We have also agreed not to increase because of we were able to recover our at least the minimum benchmark which we have set for ourselves. So there was no standardized across the NBFCs.
Okay, got it, sir. So, my second question is, what amount of gains your bank makes selling Axis PSL certificate to other banks annually, since UCO Bank has achieved 54% of PSL target?
See, PSL, we have sold only 1,000. 400 crore we have sold. See, only 400 crore excess PSL we were having in small and marginal farmers, because though we have a priority sector of 54%, but the PSL which we sell and get good return is through small and marginal farmer, where we sold only 400 crores. So we had a excess of 400 crores, and that was only 2 crore of PSLC commission which we got.
Okay. And my last question is, the NPA levels have come down significantly, while the ROS has yet to reflect that. What are the main things dragging the returns for the banks, as fresh slippage are similar to the previous year levels?
See, this year the operating expenditure was high because of the employee cost, which otherwise our operating profit would have been much higher than what is actually this time which we have shown, and it would have finally got into our net profit also.
So,
in addition to that, we made certain provisions, forward-looking provisions also this financial year to take care of in future ECL guidelines, if they are coming and when they are coming, so that bank is in a position to sustain whatever the number it comes. So that is a forward-looking provision also kept this last financial year.
okay, so any guidelines for the upcoming years for returns or bottom line?
See, if we ask me, bank is working very closely on increasing or improving its operational efficiency, and you can see that in spite of high interest rate scenario, uh, this quarter we could decrease our cost of deposit also, and cost of funds also marginally increased. So, and our net interest margin, which was around 3.03% last quarter for the domestic book, improved to 3.25. So we are working both on funds side and also our deployment side, raising of funds and deployment. to improve our margins on an ongoing basis. And once we are able to improve our operational efficiency, and then definitely looking at our net NP of 0.89%, I believe that ROA on a quarter-on-quarter basis will improve going forward.
Okay. Thank you so much, sir, and all the best for the future.
Thank you, Chitra.
Thank you, ma'am. We have our next question from the line of Mr. Amit Mishra. So you can go ahead.
Hi, sir. Thanks for the opportunity. Good afternoon, everyone.
Good afternoon.
So just wanted to know the geographical breakup of your retail advances, like in which area or which state we are more concentrated right now, because 60% of the book is RAM right now. So concentration wise, if you can give some breakup.
See, exact breakup is not with me. If my CRO is there, if in case you have exposure, please share. Otherwise, we'll give you offline that exposure.
We'll provide
Okay,
it
sir.
separately.
Okay, sir. So second question, if you can give some guidance on next year's recoveries, like what are the recoveries you are expecting for next year?
See, recovery during the year, we achieved a recovery of 3,000. Just a minute, give me a second. So we had a recovery of around 3,000 crore this year. So right of recovery was 1729, upgradation 658, and cash recovery 740. So around 3,000. So similar level of recoveries we expect. We are expecting in the next year as well, as we did in last year.
Okay. Okay. Thank you, sir. I'll get back to
Thank you.
you if I have further questions.
If anyone has any questions, please raise your hand. Meanwhile, the question queue assembles. We have a question in the chat box, sir. So we have a question from Mr. Karthik Solanki. What is the overall return of pool, NCLT and non-NCLT, and what can be recovery run rate in FY25?
I think total return of pool is around 26,000 crore, 28,000 crore. And out of that NCLT,
18,400.
19,000.
18,400.
18,400. And that is, and run rate, if you ask me, this, now in the NCLT pool, large accounts which were there, they have already been settled in. Now many of the accounts are under liquidation in NCLT, and we expect the resolution to happen to few accounts in this year. And if you ask me exactly the number, I think NCLT last year we recovered around.
NCLT last year we recovered around 142 crore.
No, that was only in quarter. I can give you this number separately.
Okay, sir. So we have a next question from the line of Mr. Jayamundra. Jayamundra, please go ahead.
Yeah, hi, good afternoon, sir, and thanks for the opportunity.
Good afternoon.
Sir, hi. So, sir, first question is, we have seen that the cost of deposit in this quarter that has declined QOQ, right, by 10 odd basis point. Is that something to read into this? Is this because of bulk, or you think, now the deposit cost of deposit is likely to remain here or unlikely to go back up? How are you reading this?
See, I tell you, cost of deposit has come down because we had excess SLR securities. So if you look at our growth in deposit, we grew only by 5.5%, whereas our advances grew by around 15.62%. So we had excess SLR securities. The certain SLR securities or non-SLR securities maybe around, I think if number is correct, more than 3,000 crore were liquidated, which were utilized into operations, and we raised against those securities also from the market, at a cheaper rate than the deposit at what rate the deposit was available. Further, if you look at our deposit, we raised deposit at the overseas location also, because their deposit with the hedging cost was total cost was coming was less than the rate which was available in the local market. So number of instruments we used to make sure that our cost of deposit is contained as far as possible. Going forward also, we have reduced our bulk deposit from March 22 to March 24. Our target is to improve on the retail term deposit and CASA, and also to use excess SLR securities available whenever there is an opportunity to raise the funds or the requirement of the fund is there. And once we achieve our CD ratio nearing to 74-75, that time we will take a fresh call for raising rates in the future.
Understood, sir. And sir, if I see the recovery in write-off, right? So that number last year for full year was 1624 crores. That has come down to 1487 crores. Do you think this number can remain here only, or it can decline? I mean, like from last year to this year, we have seen a bit of a decline. And as recovery pipeline is drying up, should this number be going down only? I mean, maybe 10% only, or you think there is an upside growth to this number?
See, I expect the number to remain in this range only, maybe 5-10% plus minus from the rate of recovery going forward, because in the previous year we got money in some big accounts. Here, large number of accounts are lined up through NARCL also. So we expect some amount through NARCL, some OTS proposals also coming forward, and through resolution also, a few accounts are lined up for resolution. So I expect that maybe plus minus 10% we may be able to maintain this number.
And sir, in that commentary, I mean, in RSL, if you get the security receipts, do you account that at a notional value, or you account as if this is cash because there is a sovereign guarantee there?
No, that is treated as a recovery only, and but SR against SR we have to make the provision also.
Okay, so this is not treated as cash, right? Because even if they have sovereign guarantee.
Yes, no, but ultimately our NPA comes down, so then the account is adjusted and the investment book is it is shifted to the investment book. So then the provision also shifts to the investment book.
Okay, understood. And last question to Sabu sir. So you mentioned that there is a few bits of under the new investment norm, there is a few bits of capital accretion, right? If I see our RWA, right, this is around 1,28,000 crore, right? And our investment book is around 90,000 crore. Right? So it looks like few basis point of CET accretion is similar to few basis point of investment accretion. In a way, what I'm trying to say is that the gain as a percentage of investment book is very, very low, right? If there's a 10-15 basis point capital accretion, like 10-15 basis point accretion to the investment book, which looks because this MTM would also include AFS only, or you are saying that the MTM is also applicable to HTM also, because HTM ideally should have should be much in the money, right? Is that the understanding right or not right?
So, Jay, your question was not very clear because you were not audible in between. But what I understand is that the impact of this reclassification on the CET1, as you are asking, correct?
Right. Yes.
So the impact is basically the reclassification has happened across the sectors means HTM to AFS, AFS to HTM, every security, right? And where there is the formula given by the RBI that SPPI criteria is fitted, and we have kept certain securities in HTM and certain securities in AFS. And on the 1st April, we have taken the revised carrying value of all those securities. On taking the revised carried value, basically the gain is only from some listed or unlisted equity only, basically. So that has only accreted into the AFS reserve or the general reserve. So on the 1st of April, that was the provision that we have to take all this thing into general reserve. Through general reserve, it will be appropriated, right? So that impact is not much, and that is not reflected on 31st March capital also, because that is the exercise done on 1st April and onwards. It will be reflected in the June if it is there any, right? So 31st March numbers are only purely based on the previous arrangement that was there in the place on 31st March.
Right.
I
No,
think
so
I
I
am clear.
understood. Yeah, so that is clear. What I wanted to know, sir, let us say the accretion, the MTM is only, let's say, 100 crores, right? That is around 8-9 basis point of CET1, right? Now, considering our investment book is, 75-80% of total RWA, the investment appreciation, the entire investment book is also very, very low. So I wanted to check, why there is so less appreciation in the investment book when we must be holding, deep in the money HTM bonds also.
So I think if you are linking this to RWA, then it is a different thing. So if we see the RWA, then only the market RWA comes into the picture, and that is very small amount. The credit RWA doesn't take into account the investment related RWA, that is in the market RWA basically, because most of the exposure in investment is to the government sovereign. So SLR securities and other recapitalization bonds. So there is no RWA, credit RWA involved into that, right? So that is only market RWA. And going forward, we will be doing the AFS portfolio M2M on quarterly basis. That will be taken into the AFS reserve, not into the P&L. Through AFS reserve, it will impact the CET1 because it will be taken into the capital, plus or minus. So the AFS MTM will impact the CET1 going forward on quarterly basis. And then I have told you that keeping in view our AFS portfolio level and the changes in the market on quarterly basis, if there is any M2M, that will only be means impacting our CET1 ratio. And that will not be much.
And what happens to HTM accretion, sir?
No. As of now, there is no change in HTM.
Okay. Okay, sir. I'll take it maybe offline. Thank you so much.
Yeah, sure. Thank you.
Thank you, sir. We have next question 9 of Maruk. Maruk, please go ahead.
Hello, sir. Hello.
You're audible.
Yes, please, Maruk.
Hello, can you hear me, sir?
Yes, Maruk, we can hear you.
Yes. So, sir, just in terms of, so, firstly, in terms of RBI inspection, right? I mean, whether be digital or any other aspect, would you have received any feedback for improvement on any of this?
See, RBI does their inspection and they give various data points where they have observations. Their IT examination is also held. Their normal inspection, supervisory review, they also do. So in that process, they do give their suggestions for improving the systems or improving the gaps where they observe the gaps are there. So that is a normal process that suggestions from their side keep on coming through various reports.
But there's nothing to which will require your immediate attention or a lot of investment from your side, right?
No, not as such, because various expenditure or the IT initiatives have already been planned, which they go through also when they come and they look at our IT budget, they look at our planned expenditure also, they look at our infrastructure. If they feel some gap is there, they suggest certain improvements. For that, then we plan and go for further enhancements. So as such, per se, nothing exceptionally high budget type of thing they have advised. They have given us various suggestions which we have implemented in the past. We are in the process of implementing, and maybe going forward also we'll get some feedback from them.
Got it, sir. Got it. Makes sense, sir. Thank you. Thanks a lot.
Thank you, ma'am. We have our next question from the line of Mr. Sushil Choksi. So please go ahead.
Sir, congratulations for stable numbers and the dividend declaration. My first question, based on your media interaction and whatever Q&A we have done here, can we elaborate more on transformation journey led by the current management for a next phase of growth, be it CD ratio, digital banking, CASA initiative, because a larger CASA is bread and butter for the bank. We've seen what has happened in the last 6 months and how UCO is going to increase their share where CASA is concerned and stabilize the bank for better profitability as days come by.
Thank you, Joxiji. Just to give you some flavor about the initiatives which bank has taken and now further improvement and new initiatives we are planning. First, we started with the tab banking in the previous year for mobilizing good quality CASA customers for onboarding them digitally at their workplaces. Now, happy to share that more than 1,600 branches have been provided with the tabs. And one more statistics which I share with you is that the average balance in the accounts which are opened through tab is higher than the accounts which are opened through in the branch network. Then we started with the resource vertical. Earlier we were not having any resources vertical, where we identified one as a saving in charge, another was as a current account in charge, a government business in charge. Now now we are going to strengthen at the ground level, means at zone level and various centers where we have a important deposit centers. We have also analyzed the top 200 deposit centers data published by RBI, and wherever we don't have our presence, we have plans to open our branches in those areas also to garner good quality CASA and deposit from those centers. Then this was about CASA acquisition, which bank is working, and current year our CASA ratio is around 39%, which we have achieved. Generally, it is 37 to 38%, and we have achieved 39%. Now, going forward, our endeavor will be that we should improve here on, and we should not come down. So that is the plan we have. Then to support our customers, we have revamped the call center also. Now it is state-of-art call center, AI-enabled call center. We have started in the last March quarter itself, and we have started seeing the results also, because number of calls have gone up and number of calls through IVR also gone up, and that is way we can serve our customers better. Then to have digital transformation, last year we started with the HR transformation. We have completed the HR transformation. All HR matters have been digitized. Now no paper movement is for the HR issues of the employees. HR transformation through PMS, performance management solution, has also been implemented in the previous year, wherein all employees now can see their performance scorecard on a month-to-month basis as against yearly in the previous regime. So that will give them the insight into the targets and their achievements on a month-to-month basis, where the areas they can improve. Now, to improve on the credit underwriting standards, the digital transformation journey has been started. We have already shortlisted the vendor. We are taking approvals. Shortly, maybe in a month or so, we will be onboarding the vendor also, wherein then our digital transformation journey for the various liability and assets product will start. So all those will be available on our app also, and through internet banking also, so and through branch assisted journey also. So in that way, it is an ambitious project which may take off somewhere around June, and for a year and a half, the project will be on, where we will do that. Then we are now also implementing hub structure across the bank. Now currently the underwriting of certain branches is done through the retail hub and MSME hub and agri hub, but some branches are doing that sanction on their own. So that also we are implementing. All branches will be integrated through the hub only in a 3 months time, and so that our underwriting standard remains robust and improves further in the times to come. Then we have also started the treasury solution, new treasury solution. We are taking very state of art, new integrated world-class treasury solution we are bringing, and which will help our treasury also to grow in a much faster place. Then on capacity building, bank has started revamping its its learning and development facilities and course curriculum, and also identifying center of excellence at various centers for a particular subject, maybe for retail credit or MSME, so that we bring the capacity building within the bank as well. So these are the few things which and on digital, another things which we are doing on the digital front is that we are bringing the VM solution also, wherein our server problems will be resolved, and we will have an in-house huge server capacity, so that our then we are in a position to implement our projects in a faster pace. Currently, we have to every time we go for if we have to implement any project, we have to go for the servers also. Once we have a VM solution, then servers will be readily available at any given point of time. We can implement any of the project which we think of. Then we are going to upgrade our various infrastructures, like our overseas Finacle also. Then we are going to implement new solutions in our cyber security also. So all these are planned, and approximately 1,000 crore of spend we have planned for this year, and that trend will continue as and when we go ahead in the whitelisting. Also, we are doing NOC we have done, MDM we have done. So various things have been completed. Now other things are in pipeline.
Sir, thank you for answering all my questions, and best wishes for the current year and years to come to the team.
Thank you, sir.
Thank you, sir. We have our next question from the line of Mr. Ashok Ajmera. So please go ahead.
Good evening, sir. This is Ashok Ajmera here. Sir, most of the questions have been answered by you, sir, in that elaborate question answer session. And the bank is also doing extremely well now under your leadership and both the ED sitting here. Sir, I got a small one or two data point as a point of information on treasury, on investment. Sir, our corporate and other bonds and debentures in non-SLR investment category is increasing from 1,614 crore in March 23 to 2,438 crore in December 23 to 2,649 crore in March 24. So what is this increase? I mean, this non-SLR, these corporate bonds, can you give some color on that what kind of investment this is and what is the yield which we are getting on this?
See, Ajmera ji, as you know that this was a time when their interest rate was high, that to block yield for future, I think along with the GSEC security, there was an option or the opportunity also in the corporate bond market. So whenever there was an opportunity to for a better yield in the corporate bond market, we went for purchasing corporate bonds of a 25 crore, 50 crore, 75 crore on a case-to-case basis, and that is mainly with the intent and to protect the yield for the future, because as we all know, with the expected rate cut, maybe 6 months down the line or whenever, the yields will come down. So to take the benefit of the yield and block the yields right now. So last year, we did increase in our exposure in the corporate bond market, and these bonds are generally AA and AAA rated companies, and in some bank also, and some PSUs also. So all sorts of bonds are there in that bucket.
What is the average yield or average interest IRR we are getting on this non-SLR, these corporate bonds? I mean, all this in this category?
This number, I think Sabuji, you have number, it may be somewhere around 8% or something.
So exact number we don't have, but I think it is around 8% or slightly less than that maybe. So around 7.8 to 9, 7.8 to 8 in that range. Sir, actually, Ajmeraji, what I want to say is that in corporate bonds we have 2-3 things in place which we apply on our selection of the corporate bonds for the investment. Number one is the tenure. So we are not going in very high modified durations. So our duration we are keeping around 3 years basically. Number one. Number two, we are going, as our MD sir has told, we are going only for the AA, AAA rated bonds in the market. So that is the credit quality we are ensuring. One we are ensuring the duration, and second the credit quality, and third one is the yield. So yield, depending upon the quality, means AAA maybe it is less than 8, AA maybe it is more than 8, and sometimes we get opportunity in the market even above 8 also. So as MD sir has already explained, to maintain our yield on the corporate bonds and overall investment portfolio, we have invested in this bond portfolio, and this has been increased by around 1,000 crore, as you have rightly noted in non-SLR bonds. So that is the basic of that.
And sir, this you have given the combined modified duration of AFS and HFT book. What is AFS book modified duration? Only AFS.
So we are given AFS and HFT, not HTM.
Both.
So AFS and HFT you have given.
Yes, sir.
What is
so
AFS?
HFT is a very small part. HFT is very small part. That is only 50 crore. So that doesn't matter much. So it is AFS HFT also the same. It is same.
About 3.1 or 3.
Yeah, 3.1. Around 3.1.
3.1 is AFS and HFT.
Okay. So you expect this modified duration little bit higher. You expect the interest rate to come down, and then you get benefited from the AFS book, isn't it?
Yes.
Yeah.
All right, sir. Thank you very much and all the best. First time, we have seen some lot of improvement in various small parameters of the bank, and you are doing extremely well, sir, with your kind of experience which you have in the banking. Thank you. Thank you and all the best, sir.
Thank you, Ajmeraji.
Thank you, sir. Thank you.
Thank you, sir. We'll take that as the last question. Over to MD, sir, for his closing remarks.
So thank you to all our analysts and investors for showing interest, and I'm happy to see large number of analysts coming this time and raising the bank's performance. We'll continue to work to strengthen our bank further to make it a future-ready bank by improving on all parameters on a quarter-on-quarter basis. Thank you very much. Thank you all.
Thank you, MD, sir. This concludes the call. Thank you everyone for joining the call.